Hello, everybody. This is September the 9th, 2024, and I am Zacks Chief Strategist and Economist. And today I am going to embark on a two-part uh, discussion. We've done this before, but the timing of the update here is critical. This is really the most important sector to study, and we're going to do it in two parts. And we have done it before. If you've seen earlier videos of this, I'm sure they were helpful. We also did the chip stocks in 5 parts. So all online and all with Zacks Professional Services and all available to you. However, of course, doing something a year or two ago, that means nothing in this fast moving world. We've got a downturn led by the NASDAQ. It's time to take a look at Zacks' top stocks in computers and technology. We will do this as we've done for the last year in those 3 parts: top stocks by market capitalization, the big stocks. Of course, there will be the mega caps in here. Top stocks by maximum number of analysts, just to confirm the coverage is largely like the market capitalization. And of course, the third part, the largest 1% change in current fiscal F1 EPS, which will be 24, maybe 25 for some of these stocks. That is the Zacks Rank core driver. And of course, in this industry, it will pick up a lot of names you don't know because there's a lot of growth stocks that are happening to move ahead even in this environment. Keep that in mind. So let's get our disclosures out of the way. These are my views. I am John Blank, and I have a PhD, and they are not necessarily the views of Zacks Investment Research. Please read the rest of this at your convenience. Okay, so always the review table. For these sectors to start, this one will be the computers and technology sector. And of course, we've got the top stock tickers here. This is the maximum market capitalization for the 4 sectors or industry groups, however you want to phrase that, 31 to 34. Of course, Apple is the biggest in computer office equipment, and then it goes to Cisco and IBM and Dell. And then we get HP, NetApp, Supermicro, Hewlett Packard. And you can see all these are arrayed in market cap within this industry group. And then, of course, we start over with a different industry group. All 4 groups are here. So this group, and of course, this group will look largely similar. There are differences here. For example, Pure Storage is leaping ahead, and it's a 15 billion market cap stock, but it's heavily covered, and you will see why. Fascinating story here. Zoom Info, not a very big market cap stock, but very well covered. It's one of those COVID stocks that has not recovered, and so on and so forth. So keep in mind things like here, for example, Generac, the power, auxiliary power generating company, not as big as it used to be, but again, a stock that is very heavily covered. So nice to keep this group and this group together because it really shows you what Wall Street cares about and what is actually just a big stock. Now, in this third area, we've got a lot of names that are really interesting to play. And in this particular industry, this is a great summary chart for finding new ideas in smaller cap stocks. As you can see, some of these are very, very small. The largest one would be Monday. That's at 12 billion in market cap. But you've got Alps Electric at 2 billion, Mercury Systems at 2 billion. I'm sorry, I misspoke. And Van Test would be at 31 billion. And lots of these are even smaller than Unisys, 1.3 billion, or 371 million. Angie at 1.3 billion. Hardcore Enterprises, 13. Some of these are very small. So keep in mind, this is an area to look for growthy small names. In the Zacks contest, these would be where you'd find a home run. However, this for investors and traders of most conventional measures would be where you find the better names. So really, this is comprehensive, and it's, if we go through 30 slides today, but this is the one that matters most. Come back to it as often as you need to. All right, top stocks by market capitalizations. Let's get into the broad current conditions. Number 1, over here, I put up Canaan, ticker CAN. This one's a provided specialty software. It's based in Guangzhou. And of course, it has been tanking, but recovering out recently in its estimates. So this is digital blockchain computing equipment in Guangzhou. Obviously, China has got no bid here, but you can see from a return on equity perspective, there was a big surge during the blockchain excitement a couple of years ago. It's turning around now, of course, with blockchain getting a little more interesting to people once again. But we're going to look across this here. We've got computer office equipment, computer software services, and if we go the next page over, we'll get semiconductors and electronics. So that's how this is going to work. We're going to do 4 different sectors in a row when we look into these fundamentals. So of course, return on equity. And if you've got this one obviously looking really nice, which is Apple, although it's fading a bit, as you can tell from 2023 on. Of course, this is a little concerning for any long-term investor, and that is why Apple saw its major investor, Warren Buffett, pull back a bit. Dell, big surges in Dell's return on equity. Not a great chart for that. Hewlett Packard, HPQ, also not a great chart on that. And of course, IBM, long over its days when it was doing quite well, but the return on equity, by the way, is still 40%. So it's a strong return on equity stock in many ways. Over here, we've got NetApp, which had a huge run. This is one of those COVID stocks, and you can see the return on equity really played out for NetApp during the COVID period when people went online suddenly in the 2020 period, ran shortly after. A lot of other names here. Hewlett Packard Enterprises, not as sprung off from HPQ, not as strong a return on equity stock from that perspective, but something to track and keep it aware of. And of course, Western Digital in the chips space, but we put it up here because it's must have some types of groups that keep it placed here. So down here, we got software services. Of course, this is where Microsoft, Meta, Google, the 2 shares of Google, we got 10 cents down here. Again, let's take a look at Microsoft. We're seeing it really strong return on equity, but it has rolled over for 2021 on. Keep that in mind. It's not always the case that things are turning up. However, look at Meta and Google. They are turning up. And 10-cent return on equity has been turning up for 2 years out of the downturn in China. So when they closed, they obviously went down, but now they're coming back up. Keep all this in mind. I mean, this is why these charts are interesting, because we're getting stories that are very updated, like I said, on these major stocks. Return on equity in Microsoft has been declining. Meta and Google is rising, and 10-cent is rising. Over here, we've got Adobe, Intuit, and Salesforce, and we can keep on going for a long time with all these names. Now, here I circled KLAC, the chip company, and Nvidia, which is obviously the darling. And you can see here we have that enormous run-up in the AI boom that took place over the last year and a half. However, it is planing out a bit, and that should be noticed. And of course, we need to point out Avogo and Texas Instruments and Analog Devices, which I put over here, which is an OEM for semiconductor devices that are in analog terms, actually declined during the period of NVIDIA's rise. So keep in mind, there was some cannibalization that went on here with NVIDIA. KLA obviously saw an earlier spike before NVIDIA, giving you some idea that this stock, that's why it's not aligned with NVIDIA here with semiconductors, a little different. It's kind of back end for that. And of course, it was built in front of and supplying to a lot of the groups that ultimately benefited a year or so later. Really interesting to see KLA still strong, by the way, still strong, but not that spiky thing that happened earlier, which also warns you that maybe there's a spiky thing that's going to happen here. We'll see. At ATYEYY, remember that was Advantest. We talked about that as the largest market cap stock that's getting an upward bid in the Zacks Rank story. Keep in mind, we get a lot of names here. You may or may not know. Of course, Agilent's in here, Garmin's in here. There's other names for you to look into. Return revenue forward 12 months. Here's Pure Storage. I talked about this. This is software-defined all-flash solutions that are uniquely fast and cloud capable. So Pure Storage is flash for fast, cloud capable customers. That really speaks to the current environment and what we're in. And you can see if you bought this stock in 2023 at $30 a share, it doubled your money in just a year. And you can see the estimate revisions really are there for Pure Storage. So Pure Storage is a stock you should be aware of, and you can see that pullback is giving you a nice entry point. Pure Storage. Pure Storage, ticker PSTG. Cool. Okay, now we're back to revenue forward 12 months, which would be 2025. Well, here you got Apple. Obviously, here is the turn at the COVID pandemic. Here is the moment of the Apple iPhone, and you can see it's still climbing quite dramatically. Of course, here's Dell. Not as much information on that stock as we'd like to have, going back to this period of time when it transitioned back into a public company. Okay, so then we got IBM, Cisco, HPQ. Again, HPQ will be over here, and we'll see HPE over here. Now here we have Supermicro, and obviously that is taking off in tandem with NVDA. And we can see Pure Storage down here. Again, if Pure Storage would have been your play coming out of the pandemic, and that was consistent with the rise in these mega cap stocks, since this was the cloud enterprises that it was supplying to, PSTG. How's it doing still? Doing well. Keep that in mind. Google, fine. Microsoft, fine. Meta, fine. Tencent, not quite as high as these other, but still just an enormous company. And remind yourself, these are revenues. So the stock is depressed relative to these. So there's still questions of when people get interested in mainland China stocks like Tencent. Keep that in mind. Oracle. I've heard Oracle's got a bid in, the founder in for Paramount down here. Keep in mind, it is also one of the biggest stocks here, bigger than CRM. Although if you rode CRM up, really nice chart for you on that respect. Here's Intuit, here's Adobe. They also still look good. So always, like I said, lots of good stocks here for you to look into. Advantest, we've talked about this. Here it is down here. It has pulled back a bit, and you can see some of the estimate revisions have come down, and now it's still surging. So you've got to wonder if this is a good or a bad time for Advantest shares. I would say probably not the right time, given that it's just surging up and its estimate revisions are coming down. There might be a better point in time here. I'd be a little worried about Advantest at this particular moment in time until these estimate revisions turn around, and that is being reflected here. The revenue forward 12 months really, peaked back in the COVID pandemic period. Carrier, TEL, Teradyne, KLAC, we've talked about that name. Now look at its revenues. It's much smoother than its return on equity. There was obviously pricing and profitability gains that are not being reflected here, but this stock is still doing quite well. Look at Nvidia. Gotta love it. And Avogo, of course, built out of this period of time over the last 10 years by M&A, and now still driving ahead. Still a good stock. AMD, we know that this is one of the stocks that also, along with Nvidia, is kicking Intel poorly. Texas Instruments, holding up. It's holding up. And ADI actually looks quite good from a revenue perspective. Its ROE is quite low, much bit lower. And of course, over here, we see what happened to Intel. Problems started all the way back in 2021 with Intel, and they're down lower on forward revenue than they've been since 2012 even. So lost decade for Nvidia or Intel. A lot of cycling for the memberships, as Micron will tell you, and they're actually doing well during this period with Nvidia. Really interesting. NXPI, another big Netherlands company that's in the chip space, planning out a bit, but still very high. And then, of course, Microchip, MCHP, going down off its highs from a year ago. This would tell you that it's a substitute for Nvidia chips, and it's getting beaten right now. All right, really interesting stuff. Reinvestment rates. There's Tencent. I talked about Tencent. Remember that Tencent was a $100 stock 3 years ago, and now it's $50. It's been halved. And some of the estimate revisions are telling you it should be a $100 stock. So when will it be a $100 stock? Hard to say. There's a whole decoupling going on with China, stock market-wise, reinvestment-wise, FDI-wise, trade-wise, all these resets in that space. The global pandemic led to supply chain changes and a lot of rethinking on China. So it really was the COVID pandemic, and we really have not seen people get interested in it. But I would point out that on a 2026 look, these shares are really attractive. So keep in mind Tencent. And I see it down here. pretty low reinvestment rate. You'd like to see something higher here. Apple's doing quite well with that. As you can see, NetApp did pretty well. SMCI looks good. PSTG we've talked about, and this is really a really nice chart here. Of course, there's Canaan. We mentioned that blockchain equipment supplier. Here it is, its reinvestment rate. NXPI now. Of course, this looks really attractive. It's a nice entry point here for NXPI. Here is its reinvestment rate, which is actually quite good for its area. And what does it do? It's a high-performance mixed signal and standard product solutions that leverage its various digital processing expertise. That's a lot of language for it. They do work in the chip space for high-performance groups. And you can see it's nothing good go up. Other than during the early stage of the pandemic, there was some selling off a bit. But now it's still surging up. It's a really nice chart for you. Taking a look at NXPI. Here's KLIC on a reinvestment rate look. It also jumps out at you, so that's a good North story to keep in mind. Total debt, of course, Oracle was built by using debt, and of course, it did work here, and the estimate revisions did snap up a bit. So Oracle, looking pretty solid as a stock. I think it's overvalued at the moment. I'd be a little scared of a stock like this because it's over its 25 revisions quite a bit. But if you're playing on a longer look, Oracle will be just fine. So total debts is, obviously coming down for places like Apple. They're not using as much as they did in this period when they were growing strongly with the iPhone building a store system out. Very interesting material here. Please get the slides from us. That's the best way to do this analysis. All right, Broadcom, up here I put it, Avago, and of course we're going to find it here. Total debt, it was built, really out of this immense surge in M&A back in the 2013-14 period. That's why they built up the debt. So what you're looking for here is stories about mergers and acquisitions. Advantest will be like this because they're probably doing a lot of acquisitions and so on and so forth. Here's HOCPY, Japanese company, and you're seeing again a chart that looks somewhat reminiscent of some big debt purchases, and that has to do with M&A most often. Okay, depreciation and amortization, I'm going to skip through those, other than I point out Hoya Corporation, which I just mentioned. HOCPY is a specially manufactured optical glass. Keep in mind, HOCPY is worth looking into. It is a Japanese company and a Japanese listed stock. So it will have a little different story for you in the US stock, and probably a very much lower share price. Maximum number of analysts. Let's get through this. We've got some great price, EPS consensus, and EPS price charts. The top 8 stocks here. Great names. Apple looks great. Cisco kind of selling off and range trading. There's your Pure Storage. We talked about this name. You probably don't know it. You should. Zoom still has not turned around its share price. Google, nice entry point for you on either types of class of stock. Microsoft, also nice entry point in the mega caps. Meta would be the one which has the least attractive entry point for you right now. Keep that in mind. All right, Intel, really the classic story of being just beaten in the market by Nvidia chips. You could have seen this happening. And 2021 is when you should have gotten out of Intel stock. They've had a really rough 3 years. Let's see what happens with Intel. Here's AMD, also a competitor of Intel, and Nvidia, they're looking pretty sharp, and a nice pullback for you on AMD shares. So keep in mind here, there's another trade you can look for. On shares, the original semiconductor company of Silicon Valley, looking attractive as well. Generac, really interesting share price here. Big, people are putting in spare power out during the internet period or the COVID period. Now it actually is recovering, and the earning estimates are looking pretty attractive. Keep that one in mind. Teradyne, fully valued, interesting share price chart though, fairly bullish. BLDP, Ballard Power Systems, you probably don't know that name, ticker BLDBT. This is focused on fuel cell systems for transportation, stationary, and portable apps. So this was fuel cells in a big run up, and it's another one of these COVID stocks like Zoom. Beaten down, still beaten down, doesn't look attractive as an entry point. But the estimate regions have turned around of late. Carrier, of course, since in the air conditioning space, probably have a lot of their stuff and looking pretty attractive. All right, net margin. Really, I think you want to look at the actual absolute net margins, things like pure storage here, of course. Here's where they came up over the last 10 years. You can see this was really just an incredibly good ride. If you picked it up 10 years ago and wrote it up, it was a good name for you. Here we've got Palo Alto Networks. Again, this is the security businesses, and they're doing quite well. Here's Crowd, much lower profitability than Palo Alto. So you can tell that Crowd, for whatever reason, was not a strong, profitable stock before its recent struggles with the outage. So Infineon, here's a name. HPQ again, of course, HP should have been and is somewhere else, but we'll find it right there. HPQ and HPE, we put them together this time. So all kinds of information for you from a net margin perspective. Again, stronger and growing net margins would be the business you want to be in. And there's a lot of those in here for you to be attracted to. Okay, here we get Nvidia just zooming up a net margin to 55% net margin, double on quadruple analog devices, and 10 times what AMD is, and Intel down here in a net margin of 2%. Just an incredible story here from a net margin perspective. Just look at this. This is fascinating. Keep this in mind. And of course, over here, Texas Instruments margins came down. Avogo's margins came down, and NXPI is what's holding up. There is a classic story of where the business looks most attractive in this environment. You're selling down your profit margin. That's really not a good story. Here's Ambarella. This stock has been doing nothing but going down for 10 years now. All kinds of information here for you. Here's Ballard Power Systems, of course. Negative, not a good story. Was a better story long ago. Generac, not a big margin story here for you to look into. KLAC, of course, really strong margins in these chip companies. CapEx to depreciation, not as much for you, but you look to things like PSTG. There's Pure Storage again, Google, of course. People who are building out the CapEx and the data centers are going to show you that right here. And that is exactly what's happened here. And of course, you can see here, there's some CapEx surging that came out of the COVID pandemic for these groups that were having to supply the market. Now cooling off. This is, you see in the manufacturing PMIs, like things like this. But you can see it's still actually quite high. It was just a surgy thing, and now it's cooling off. People are calling that a recession. I think it's just natural cooling off after a hot period. People just don't need the CapEx for that particular area. All right, look at this one. Texas Instruments building out their CapEx strongly. Got to believe they think their business is strong. Agilent, same story here. Lots of interesting vignettes and stories for you to look into from a CapEx to depreciation. This is an interesting chart perspective. Again, we're doing this on the maximum number of analysts, not the maximum or the market capitalization. Total debt to capital, again, really a nice thing to look into if you're looking for M&As. Here's Microsoft. You can just see they really built up the debt until 2017, and then they really come down on it. This is probably the classic story of when they started to build out their other businesses outside of the office market, and when they used the profitability and paid down that debt. Really interesting story there. Is HPQ's got an interesting story. Lots of stuff to look into, folks. Here's debt to cap, and over here I have KLAC. Of course, big surgy things because they were probably doing some M&A. All right, now we're into the Zacks rankiness stuff. This is names. I have less knowledge of these names and tickers, and I have to go back to that original table. So what do we have here? We have some stories that are all over the place. Here's RDCM. This one has got a cash flow that's coming up. Really nice story. Angie looks pretty good. Here's Okta, which I am currently trading in the large cap trader. It's also surging up and looking pretty good. These are the names you're looking at. CRNC. Here's a name that's jumping up and it's worth looking into. IMMR. Again, really interesting names for you. CAJPY. Actually, maybe names is not the right word, tickers. So from a cash flow yield perspective, you can look into these tickers and get some interesting ideas. Here's another set of interesting ideas in the chip space. And you can see these are, you like Cirrus is the best name. Here's Tokyo Electron. Here's Nvidia. Get a lot of interesting names. Here's Advantest. And then, of course, there's other stuff that you may not know down here. Here's Ballard Power Systems. Not looking good from a cash flow yield perspective right now. All right, enterprise value to sales. I picked up IonQ, Ionic. Provides quantum systems through the cloud again on Amazon, Microsoft, and Google. So this is obviously one of these cloud data systems providers. It's based in College Park, Maryland. You probably don't know this name, IonQ. Keep in mind, it has a very strong enterprise value sale. This is something people in the market like. As a stock, I got to figure the business was looking into. So that's why I isolated it. In this perspective, there's a lot of other stories here from a valuation perspective on where you should be playing. And again, these are interesting stories within the Zacks ranking space for you to look into. Here's the other set of stories. Again, this is number one. There's number two. And of course, over here, you've got enterprise value to sales really skyrocketing for Nvidia. And Advantest, of course, also looking quite good. And then there's things like this. Don't know much about it. NVX. Keep in mind, these are probably shared names that you don't know often. This is TTDKY. That's TDK. That's in Japan, and I think it saw an early surge, and now it's coming back down. All right, so we're back to part one, computer and tech stocks. Now we're comparing the entire set of groups, office equipment, software services, semiconductors, and so on. Electronics over here. So this is giving you an industry perspective on these different things. So over here, we've got earnings pureness. Over here, we've got capital expenditure. And down here, we got the enterprise value, this free cash flow. This is really interesting to see, for example. This is really surging up with the semiconductors, but now it's come way down. This may be the most interesting data in this chart. It really is sinking after a huge spike, and now you've got a nice attractive valuation on an industry perspective within the semiconductor space. Really worth knowing that it generally has been going up, but you did do well on the pullbacks in the semi space, and you've got one right now. Keep that in mind. This is really an interesting chart because you get the four industries and you can see how they're all doing. The one that's kind of pulling back here is the electronic sector. That, like I said, is partly related to the durables explosion that happened earlier on, and now people are waiting for the next round. It might wait quite a long time. We'll see. And of course, here we got industry groups, the four part one industry groups by profitability, EBIT. There is your classic story for Nvidia playing for the whole industry. Over here, you've got total liabilities. And down here, you've got a quick ratio. Obviously, this is the chart that's really of interest and should be attracting all of your interest, that everything is actually healthy and there's a big surge up in the semi space, as we all know. And look at this, folks. I mean, I hear a lot about recessions and people worrying. Look at the earnings of these charts. I simply cannot see anything of concern here. And if you're going to look for a concern, of course, it may come only in the second half of a cycle. This was back in 2008. It took a while because the banking system was breaking down for it to hit the economy and slow these stocks down. So these stocks are looking attractive now, and they're really in no danger of a recession story for the moment. All right, thanks for attending. I hope you enjoyed it. Really an interesting slide set deck, and you can get them from us at these contacts, 866-794-6065. Call us at strategy, call at zackspro.com. Find us on the web at www.zackspro.com, or go to LinkedIn and find us at Zacks Professional Services. Send us a message. or find us on Twitter at ZA Tools. Obviously, the best way to go is right over here. Call us or send us an email. Find us on the web. That's really the way to do it. Okay, I hope you enjoyed it.